Yeah, first of all, thank you for having me. It's a pleasure. Just show of hands, I can see most folks out there. Before Avenue started working with Apex, how many of you had actually heard of Apex? Okay, it's actually better than I would have expected. Yeah, we started the company now 13 years ago. And the fun part for me is we had an express purpose for Apex, right? I started my career at DLJ. DLJ owned this company called Pershing, which most of the folks here know, and kind of learned the back end of our industry. And so we started Apex now 13 years ago. And the purpose was, how do we help every person on the planet invest? The fun part for me is you fast forward to today, and we started with nothing, right? It was like, okay, I understand the back end, kind of how it works, and we're going to use technology to, kind of disrupt the industry and drive, sort of allow for every person on this planet to invest. If you remember, let's go back 13 years, it was a rich person's game, right? To get access to the U.S. markets. There wasn't this notion of democratization as there is today. And I'm proud of what Apex has done. So we now there's roughly $200 billion in assets at Apex. We have and we're purely B2B platform. We don't do anything B2C. We have about 1,000 employees at Apex, of which about 60% are technologists. Probably the most, let's go back to the purpose, help every person on the planet invest. Probably my most proud stat is we support close to 25 million people today from about 180 different countries around the world. And the average account size is, in the eyes of somebody like a Schwab or a Fidelity, they're the undesirables. The average account size is somewhere between $15,000 and $20,000 US dollars. So small accounts. And the whole premise was, okay, we're going to lower the barriers, create this platform that allows people to open accounts, fund, trade, send confirms and statements, do all the tax reporting, settle trades, and do that in an incredibly efficient way.
Bill, were you a founder of Apex? You told me the story, but I remember the transition with Pick 6 and all that. So
yeah, so the firm it's got an interesting sort of founding. We owned so there's a parent company. I'm a partner of the parent company called Peak 6 out of Chicago. We had founded a direct-to-consumer app, one of the original apps, and this is now 16 years ago. And we used a firm called Penson. Anybody here? Any hands up?
I know Penson well.
Okay. Penson Financial was a public company. It was a clearing firm in the United States. And at the time, I was, back when I was at Pershing, they were kind of this kind of ugly stepchild to a Pershing or a Bear Stearns. Make a very long story short, they ran into major issues financially. We were using them as our clearing firm. The SEC called us and asked us to step in and buy the assets of this thing called Penson. And really with a gun to our heads, that was how we got into, the business. Having spent 10 years at Pershing, I knew what it could be. Right. So here we are, 13 years later, and it's a pretty amazing business.
So let me step one here. What's a clearing firm, Bill? What's the role of a clearing firm within the financial system?
Yeah. So there's two terms that are used somewhat interchangeably. There's a custodian, and there's this notion of a clearing firm. And the distinction is, for a custodian, typically that's you're working with a fee-based advisor. And that custodian, in the case of, let's just take a Schwab, they act solely as a custodian. So their clients are either direct, an individual, or they're working with a fee-based advisor, and they're acting as that custodian. The other term is a clearing firm. And in the case of a clearing firm, you're working with a financial intermediary that's typically a broker-dealer. Right? And so Apex acts as both a custodian for advisors and as a clearing firm for introducing firms like Avenue.
So you've been in this business for a long time, like clearing and execution, right?
Yeah.
when you joined Apex, when you're the founder of
Yeah.
Apex, what kind of problems you were trying to solve, Bill? Like where, because you probably saw something that you say I can improve. There's a gap in the market. What are you trying to solve? And the follow up question is that 0 to 10, where are you with these goals?
Yeah. So let's go back 10 years. Think about the market, and I'll give you some perspective, at least in the US. So 10 years ago, the average trade, so a retail investor wanted to put on a trade, it was $10 per trade. You were paying $10, 10 US dollars for every trade. So if you bought, $500 worth of stock, you were paying, 200 to 250 basis points for the acquisition of that security. It's amazing, like crazy amount of money that you're paying. Two, the access was terrible, right? Opening accounts took days. Funding the accounts took days. The settlement
PDFs, right?
Yeah, it was all paper based. So when you're trying to open an account, everything was on paper. People were sending FedExes to your house to sign, and with the yellow stickies. The settlement cycle was T+3. So if you bought a security today, you didn't settle it until Monday. It was just incredibly, and you thought about what was our world like outside of financial services investing. Amazon was there, and it was, the Netflix was around. It was just a much better user experience in their people's, general lives. And then you sort of got into investing. And one is there was a ton of friction, and two, it was for rich people. Right, so the ability for someone to invest on a fractional basis, meaning buy in notional. So I have $300 that I have, and I want to buy Berkshire Hathaway. It was impossible 10 years ago to do that. You could not buy Berkshire Hathaway because you just weren't rich enough to do so. And so one was, we were the ones that drove zero commission. So today it's now, it's standard in the US. 10 years ago, it was Apex in partnership with Robinhood that drove zero commission. We're the first to do no paperwork to open an account, totally digital account opening. We're the first to do fractional, right? So notional for equities and fixed income. And that's been sort of the ethos of this company, which is drive innovation. And because we're a B2B company, we don't get a lot of credit for it. But as a company, most of the things that we do, there's kind of fast follows in the industry.
And Robinhood started with you guys, right?
Yeah. Yeah, they were with us up until 2019. And infamously, they decided to try and do this themselves. And, if you were following the news in and around the meme stock crazy back in 2021, they learned really painfully how hard it is to do this, this clearing custody stuff. They ran into some issues, had to infamously raise billions of dollars over a weekend.
Yeah, that was interesting. But Lee, now, why don't you, from our point of view, why did we choose Apex?
And Bill, I keep hearing you guys talking about all this journey, and it really creeps me of remembering how analogic was our life a few years ago, right?
Yeah.
And when we were arriving in the United States and trying to figure out how to put in place a new broker dealer that had this goal, like giving access to a bunch of non-US citizens, right? A bunch of Brazilians that never heard about investing in the US. We had two main goals, right? And the first one was scale, right? How can we onboard this massive amount of Brazilians to the offshore market, right? And then imagine back then, 8 years ago, when we were studying the infrastructure, onboarding a non-US resident used to take 15 business days, right? Completely out of question here. There's no way we onboard clients within more than 5 minutes. Imagine 18 business days. We had other problems like funding accounts. If you're remitting money from Brazil to the US, it used to take 48 hours, and maybe more, right? So scale was something very, very central to our strategy. And with that comes technology, right? So how can we onboard clients in a massive way? How could we execute it, orders in scale, display the custody, display how much they are earning money, how the portfolio is going on, how can we provide tax support for all of them. So technology was a must. But then we have like the second goal, and I think, to be honest, maybe more important than the first one, it has to be safe, right? I think the most important part of my job, of someone who's trying to build a broker dealer, is to take good care of our clients' money, right? And I think most because of your background, deeply knowing how the U.S. infrastructure works, how the rails of the money flows, right? It really solved this challenge for us. So Apex was the right choice, right? It gave us both, because when we were trying to put in place, right, very scalable infrastructure, you need technology and a very robust infrastructure, financial infrastructure, comes a challenge. Back in time, either you had a partner with a robust API or technology infrastructure, but might give you some instability in terms of finance, or you have a rock solid business partner like Persian, but that would put you most probably in a very analog infrastructure with a lot of no's, right? A lot of paperwork. And at Apex, we found the best of both worlds, right? Between technology and security, you cannot choose balance. You have to have the best of both worlds. And that's what we found at Apex. So with Apex, I have first, like, peace of mind. So at least when it comes from sleeping at night, in terms of how well the cash of our clients are being held, I can sleep well. And second, there is massive scale and the mindset of Apex teams that really allows us to focus in our job, which is like creating a great experience for our B2B partners, for our clients, for all the ray of the money transfer between Brazil and the United States, and everything that surrounds the customer or our partner's experience. So again, I think we are super well served partnering with Apex Clearing. Hopefully, we still have lots and lots and lots to build.
Lee, I remember the first time we talked, you showed me the business plan and I said, oh boy, this is not going to work. There's no way this is going to work.
Yeah, the one thing I would say to that, and I think to your point, you got to dot I's and cross T's from a regulatory perspective, right? And I think to your point about safety, it's great that you can open an account in seconds, and it's great that you can fund in seconds and do all this kind of amazing stuff. But if you don't follow the rules, you're going to run into problems, right? And I think I've been at this a long time. I think, this is what has created Apex, which is, I'll say some of the rules are Byzantine, some of them are old, but the rules are there, and you've got to figure out how to get creative and build solutions, but stay within that framework. Right? I sit on the board of DTCC. I think, in large part, to make sure that this firm, Apex, is in fact, like you said, is doing the right things in the industry, and leading from the front in terms of actually driving change, but doing it in a totally responsible way, which I think we're as a firm, I think we're getting there. Yeah.
So we're changing subjects here. How's the U.S. has been transitioning from a commission to a fee base over the past 2 decades, right?
Yeah.
And I think that transition is just picking up speed. Can you walk us through how the market evolved in the U.S.?
Yeah. So if you rewind the tape, and we're talking 10 years ago, let's go a little bit further back, 20 years ago. Roughly 80% of the U.S. market was commission based. Today, fast forward to today, it's just the opposite. 80% of the U.S. market now is fee-based. And that transition, and by the way, what's left of that 20% that's commission-based in the U.S. is really just remnants, right? The old guard that still kind of has clients that are commission-based, right? My expectation is if we fast forward another, 5 years to 10 years, as those kind of the old guard finally ages out, because we have a fairly older generation of advisors in the U.S. We'll see that number continue to go up. from that commission, what's left of the 20%. There is a new phenomenon, which is a fixed fee, which is starting to take hold, which is, you charge a client a fixed flat fee. And there's a number of advisors that are having real success in the U.S. where they're charging $1,000 per year a flat fee and not necessarily fee-based. Still really early days, but I think the days of this, the commission side are really kind of, sort of moving behind. And in part because I think it positions the advisors to really act in that fiduciary capacity, right? Not have to worry about churning and things where they're making decisions that may not necessarily be in the best interest. It's set up the advisors in the U.S., right, and that moved to this fee-based to kind of unshackle themselves from that concern around, are they making the right decisions? Are they doing the right things for the clients? And, in the case of fee-based, allow them to do that.
And Bill, what's the force behind this transition? Is that regulatory? We have Reg BI now. I bet is a big force behind this. Is that demand from clients for transparency? Is it a business model? It's a better business model for the advisors. What do you think?
Yeah, I mean, all of the above. I would say it's much less about the regulatory push, because I think there's been some improvements lately using Reg BI, some of the other regulations that come out. But this trend has moved swiftly over the course of, say 20 years ago. That move really started 20 years ago, and I think it's primarily two reasons. One is there's better ways for the advisor to make money, and not have that concern about churning accounts and transactions. They don't have to worry about that anymore. And if you remember 20 years ago, let's just talk about what Apex does. All those transactions cost a lot of money to do. Now you don't have the same concern, so you can offer a fee-based, commission structure, and not have a lot of the same costs that kind of sat behind. The second part you mentioned is just transparency from clients, right? I think overall people want more access to markets. We may talk a little bit about alts. They want access to direct indexed products. And it becomes a lot more tricky if you start talking about on a commission base versus just charging a flat fee. So a lot of it has been really driven by, two main factors. One is, the market, the advisors are making more money on a fee base, right? So who here has seen the commercial Fisher investment? You guys ever seen the commercial? Ken Fisher.
I see that all the time. They actually raised the minimums. Was it 500,000? They went to $1 million, right?
They did. But there's a commercial. It's on CNBC all the time, and Ken says, at the end of the commercial, he says, we only make money if you make money, right? And this notion of kind of aligning the interests of the client with the interests of Fisher, and that does generally stand to reason when you're in a fee-based type of environment. I do think what's going to be interesting is, again, let's talk 5 to 10 years from today. My sense is that there still be some commission because there are certain clients that will want that type of structure. Fee-based will be predominantly, including here in Brazil, I think will continue to sort of march towards that path. And I think this flat fee structure is going to start to become more relevant in the U.S. and, maybe here in the next 5 to 10 years. But my bet is 5 years from now, we'll see 10% or so of the U.S. market will be flat fee structure.
That's a good segue for me to ask Lee. There's a famous quote from Martin Escobar that says, basically, the secret to invest in Brazil is to watch what happened in the U.S. and wait. Right? Is this the case here? Are we going through the same transition? What's going on in Brazil?
It's true. This should make our lives much easier, right? In fact, it doesn't, but it's true. What happened in the U.S. takes like 2 or 3 years, maybe a little bit more, and then it happens in Brazil, right? So we can kind of predict the future. But I think this shift to commission base, right? Few years ago, it was a trend. Now it really got momentum. Just to give a little bit of numbers to our audience here. This year, as of now, 4 out of our top 10 partners in terms of net inflow, monthly net inflow, are now fee-based. And I can bet that next year, when we are here on stage, 3 of our top 5 partners, again, in terms of monthly net inflow, will be running under the fee-based model. And again, it really got momentum. We are not just looking. Our team is like heavily bet on this. This is the new trend. This is the new day-to-day talks that happens in our corridors here. So we've been building new technologies, new ways for our advisors to execute orders in a different way. We are trying to build new compliance rails to make it more flexible for those who are running under this new model. And I think, well, I don't know if next year within 2 years, the fee base will be dominant here, but I'm sure that for us it will be a strategic part of our day to day. And we are again building the rails, building the systems to be the best partner for those who want to lead and want to lead the shift towards the commission base. And as Bill said, it's more transparent. It's more aligned to the clients. It is when you talk to the clients individually, it is the natural choice that they made every single time. So again, we are betting heavily on this. Let's build together. That's why we need a lot of interaction with the audience here. We need to learn what's your needs, what your client needs, what can we build to accelerate, to speed up this transition. Because I think it's like, again, the future that Martin said that will happen in Brazil just because it happened in the US, it's going on. It's really got momentum, and we are here to help you guys lead this new trend.
So I think we have a slide for the next topic, which is the wealth transfer. Can you guys put it on?
Do I have to press it?
No, we have to wait.
Maybe not. But the one thing I would say while waiting for the slide to come up, I think folks here may or may not know, we work with most of the big banks here in Brazil. And I'm not saying this just because I'm up on stage with the Avenue folks. The leadership of Avenue is driving change in Brazil. I was talking to Alex backstage. It's amazing for me to watch this market evolve. I've been working in and around Brazil for the last 25 years. And I think on the retail side, there's always been this sort of connection to the Pershings and some of the bigger banks for high net worth, ultra high net worth, which has always been there. And I think it was Avenue who sort of pulled the pin, right? The leadership of Avenue that sort of pulled the pin and thought about how do we do this differently to support not just ultra high net worth folks here in Brazil, but also mass affluent and down. And I think we were talking about before. Build a chassis, and this is where the relationship between Apex and Avenue is it's sort of a peanut butter and jelly type of moment, right? In that you build the product for the advisors and for the end customers that are out there. You build this amazing kind of client-facing support, and for Apex, the sort of back end of the inchworm, or that sort of man or woman behind the curtain. Our job is to bring that to life in a safe, secure, and incredibly efficient way. And it's fun, right? It's really fun because I think there's still a lot. We're in, make a bad U.S. sports analogy, right? You think about a baseball game, 9 innings. We're probably in the 2nd inning. We have a long way to go and a lot of opportunity ahead.
But Bill, I don't know if you want to go through the slide first. But one question I was going to ask you is, a couple months ago, Robinhood announced the acquisition of Trade PMR, which is a traditional advisor, which kind of shocked the market, right? Because you wouldn't expect that a fintech, self-directed platform would be acquiring a traditional advisor. You want to walk through the deal and why they did that, and then we go right into the presentation.
It ties right into this, and I think for the folks that are here, there's a massive amount of wealth that's sitting with baby boomers, right? I mean, you could, I don't know, the numbers, lots of different reports. It's a shit ton of money, right? So this is 124 trillion. You're talking a massive amount of money that's going to be in motion. And it's going to be over the next 20, 25 years, right? And the question is, how is that going to work? And historically, let's talk about the U.S. And I'm a, sort of a, an example of this. So my dad had an advisor. My dad, when I started to get some real money, my dad said, "Here, talk to Glenn," is his name. And my wife and I went in, met Glenn, and Glenn then turned the business over to Arthur, person that works for him. And I've been with this firm now for 20 something years. I'm in this business. If you ask me, why am I with this advisor today? Because my dad handed me to this person. And by the way, I was lucky to get into this firm back when I did with my wife, because you were talking about Fisher. I certainly didn't have $500,000 to write a check into this person. It was a small account, but because of my dad and my mom, this was this connection. This is the way that the industry has worked. It's just generational. It's just kind of like, okay, hands, through, family generations. That is changing. Right? I talk about this all the time. We'll get into the Robinhood piece, but this money is going to be in motion. So there's a massive amount of money that's going to move from left to right. And at the same time, the players, the industry has changed quite a bit. And let's use the Robinhood analogy. So I know Vlad really well. We're friends. The account started to decline. So what was happening, right? And they did a bunch of research, talked to those folks. And these are people that started to actually build wealth and started to make more money. And at around that $500,000 mark, magically, they picked their heads up and said, "Hey, I need something better than Robinhood. I need real advice," right? And they turned to an advisor, right? And what happened is that the account plateaued, no more money came into it. And then an advisor then said to that person, "You really shouldn't be doing this Robinhood thing anymore. Start taking money out of Robinhood," right? And they started to see the account start to decline, right? And so Robinhood, and I think it's a good example of what, we have most of the large fintechs use Apex today. So the SoFis and the Stashes and the Weebles, the eToros, they're all adding advice. Human advice, hybrid type of advice, they're all adding advice to their platform. And the whole premise there is they have these small accounts. They have people that are starting their lives in their 20s, small accounts, and they're going to keep those people. So as this wealth transfer happens, right, what happened with me, which was, hey, Glenn at, AG Edwards, there's now going to be choices for those people. And those brands like Robinhood has built loyalty with that individual. So why do I have to now pick up and find an advisor? I can just stay with Robinhood. Right. So the phenomenon there in the US is that most of the larger fintechs are all now adding, if it was self-directed, whether it was a robo solution or it was pick a stock solution like a Robinhood or a Webull, they're all now adding human advisors to the mix. So that's on the kind of left end. And it's moving fast from left to right in terms of those fintechs.
Just one point, you would expect to be the other way around, right? Like the traditional advisors to add technology instead of the way it's happening, right?
Yeah, and I was going to get there. The sad reality, and just speak about U.S. advisors, there's just apathy and maybe even arrogance to some extent, right? And this whole notion that, you mentioned Fisher, who just raised their minimum. Right, there's this notion of like, well, we're Fisher. People, of course, are going to come to Fisher because we have this brand, and we're ultra high net worth, and we focus on sort of private assets. It's going to break over the next 10 years for them. I think what I do see on the advisory front is there are progressive leaders. I talk about missionaries versus mercenaries. Like, do you run your company as a mercenary where you're looking for an outcome in a sale? Or are you thinking about your company as a missionary, meaning that this firm will sustain forever? And what I see with a bunch of some of the missionary owners of some of those advisor firms, they're now starting to add digital capabilities, right? And where things are going to settle in, I think it's going to be in the next 5 to 10 years is this kind of hybrid that sits in between, right? Which is, episodic advice, I call it, right? The convergence between sort of the fintech, bleeding edge, Robinhood on one side. And again, I keep using Fisher for no other reason that people mostly know them. And the old Fisher on the other side. We're going to settle into this middle ground. And I'm going to talk a little bit later about AI. The acceleration through technology is going to be massive, right? And there's going to be the haves and the have-nots. And so when you look at this wealth transfer, I look at this, and so should everyone here, as massive opportunity, right? But the opportunity is you got to actually get on board, folks like Avenue, and lean hard in, because on the other side of it is going to be a whole bunch of people that are going to be left behind.
So a question for you and for Lee, but do you think this younger generation going to keep the same advisors, or are they going to change?
Yeah. I think they're going to change. Yeah. I don't think, the same thing that happened to me is going to happen for most people. I wouldn't say no one's going to pick their dad's and mom's advisor. I think there's going to be plenty of people that do that, right? But I do think the cycle historically is going to change in that you think about, I have 25 million people that use Apex. They're on some fintech platform that's out there. Most of those fintech platforms are adding advice, right? And doing it in a kind of a more on-brand way. As this wealth transfer happens, they now have a choice to make. Do I stay on SoFi that now has an advisor that's been assigned to me? I know who that person is. Or do I pick up and move to, again, I'll just keep picking on Fisher, right? That option was never there in the past. It's now there, right? And I think what SoFis of the world are doing is they're building sort of trust and loyalty with that customer. So it's not going to be as easy as it was, 10, 15 years ago for that person, once they have real money, to look for, an alternative.
So Lee, I know that Dad already covered that like in the opening, but I want to ask you about the 9 trillion in Brazil. That was a report from UBS. I think Brazil is number 2, which is a big surprise, I think. But I want to ask you from a different perspective. Because like in Brazil, not only going to happen this transfer of money, but also the money probably not going to stay in Brazil, right? Because the older generation has a lot of, it's kind of hard for them to accept investing overseas, right? I think back in the 80s, it was a bad thing. So I think there's a bad rep in the minds of the baby boomers here in Brazil. So what do you think? How this is going to happen?
Well, yeah, for sure. Like $9 trillion is a lot of money. So $9 trillion migrating for like an elder generation to the second generation, right? Guys from 40, 45 years old in Brazil is like a huge transformation, right? And I think that people ask us, like, why this all internationalization movement is happening now? And the main reason is this transfer of wealth, right? The behavior of these new investors is pretty different from the previous generation. I think like the elder generation, the previous generation, they actually guys that holds the wealth nowadays, they're pretty like, they have a kind of a block when it comes from investing offshore, right? And this second generation is completely different. Maybe because we grew up. I say we because I feel part of it. Right? We millennials, right? But we grew up in a much more connected world, a much more globalized world, and we never had access to the offshore. So this new generation, the ones who are receiving all this massive wealth, first they are really opened. We see two characteristics on this new generation of Brazilians. First, they're really, really open to the internationalization of their portfolios. By the way, those advisors, well, this new generation of investors, they see irrelevance on the advisors that cannot offer offshore products to them. So that's trend number one. And the second thing which is very interesting when we survey this new generation, is that all of them have a similar goal, which is creating the conditions so my kids can study abroad. And that's incredible, because that changes a lot of things. So by building wealth, by building a portfolio that can allow their kids, when they grow, to have the option of studying abroad as a goal, as a similar goal into the market, like changes the way we have to build their portfolios in order for them to achieve those goals, right? And I think that's the main reason why we're seeing this huge acceleration in our industry towards the offshore. And then we have like this third trend, like maybe a more generational, right? Those guys that have like 20, 25 years old are entering the investment world as of now, and will also benefit from this huge transfer of wealth, that they are super connected through technology. They're technology dependent, different from their parents, from my generation, which is like we are super advisory dependent, right? We need to build trust with someone in order to build our portfolios. This new guys, those younger investors, they are connected to internet and they are performing their first investments in their lives through a US listed equity, right? Instead of a savings account or poupança in Brazil or fixed income or Petrobras stocks, they're investing in companies like Nvidia, Tesla, Google, those Coinbase, those companies that are really transforming the way we live and the way they will live their lives from decades and on. So again, that comes a challenge, right? And I'm here with Bill. From one side, we have my generation here, truly a super advisory dependent. And with that comes a super analogic world as well. Through a human advisor, we can really build trust, but we cannot scale, right? We cannot serve thousands and thousands and thousands of clients at the same time. Much of the times we're using one-to-one meetings, phone calls, paper reports, right? And on the other hand, the guys that use technology, they really can scale, but there's a difficult part of the relationship, which is like building trust. Right? And in the future, I think that this new investor they won't choose between one and another. They will have both. They want both. Right? So how can we take all the massive scale that technology can provide to us and the massive trust that the advisory work performs with the final client? I think that the answer lies on artificial intelligence. Right? This technology is here. It's now. It's present. It's transforming. We still don't know how to use it, but I'm sure that if we find the right way to use, we will take all the benefits of a scalable technology and add the trust that only a human advisor can build with a final client. So again, a lot of transformations. This huge transfer of wealth will put pressure on companies like ours, like Avenue, like Apex, like all the advisors that are present here, but also will deliver us a massive opportunity for us to lead the way, like to build new ways of serving clients and again, transform the investment category now towards the offshore, now towards trust, now towards a much more globalized world with lots of opportunities for us, for our careers, and for our clients.
But before we go to AI, because we just have 5 minutes left, I just want to make the point, Bill. I think we have another slide that the US is a gateway to the world. We were going to talk about retail flows, but I think we can skip that so we have time to discuss a little technology later. But can you expand on that? Because just to put in perspective, when the tariffs were kicking in and the markets were selling off, people, I'm not going to open the account at Avenue because I don't want to invest in the US. I don't like the US markets. But the point we're making is that even though the US is like, 60% MSCI?
Yep.
Through the US markets, you do have access to the entire world, right? You have ETFs, you have ADRs, you have mutual funds. The liquidity is there. The capital is there. Technology, products, so you have, it's not, when you open an account it's not, you don't have access just to US, right? You have access to the entire globe. Can you expand on that, Bill?
Yeah, there's some folks I think here from BlackRock. We were talking backstage. Exactly right. Which is number one. The amazing part about the U.S. market is it's still, and I think it's going to continue to attract young founders, entrepreneurs. We talked about founding Apex way back when. And so companies like you mentioned, NVIDIA, companies like CoreWeave, right, that are kind of the bleeding edge of what's happening in AI. Most of those companies are IPOing or positioned in the United States, right? Whether it's a private market, right, through alts that you can access, or the public markets. A lot of those companies are sitting inside the U.S. And then the second part, and you mentioned it, Alex, is and then you have sort of the ETF, mutual fund wrappers in and around some of the international markets, right, that provide access. And the nice part is, through our connection between Avenue and Apex, you get access, whether it's on a single stock basis, whether it's the private markets through alts, or the international markets through the GDR, ADR, ETF, mutual fund. Those things are all available, all right, as part of sort of what is the connection through Avenue and into Apex. One thing I would say back to we talked about before, Robo was a phenomenon that started roughly 10 years ago, right? So the wealth fronts, the betterments that Apex supports, and it didn't really work.
We tried.
Yeah, it didn't work, and it didn't work because most of the audience as advisors, people still want a human. I don't think that's going away, right? And what happened with Robo was it was like this weird thing to the side. It was like a company that started and said, we're just going to do totally digital, and the investment's going to be digital, and there will be no human. And I think what we're saying is that that concept, though, of Robo should sit inside the advisor. Like if you can actually get your head wrapped around how to take that technology, right, and kind of wrap it in. And a really good example of this, we have a client in the States. They have a relationship with Fidelity and they have a relationship with Apex. And they split the assets between the two, although more is coming to Apex, in large part because that firm has embraced technology. There are 100 clients per every one advisor at Fidelity, and at Apex, it's 400 clients per advisor. And it's not just the Apex technology. They actually had to make changes themselves on on this client that uses Apex. But this is embracing technology. It's leaning in. It's taking the essence around things like Robo and sort of really kind of embracing how do you become more scalable? How do you become such that you can embrace technology? The end client want this. Right. I think especially in the younger generation, they're going to want something that's much more digital. That's, I don't have my phone, but that they can see. Right. And it's not necessarily just through a Fisher advisor that they're going to get access to a portfolio.
That's great. So we don't have much time left. I think we can go over a couple of minutes, but looking forward, Bill, and watching one of the podcasts, preparing for this that you were on, you mentioned like people ask you about three things, AI, crypto, and alts. Of course, we're not going to have time to go over all this, but very like a elevator pitch here, like something like on the AI. Because I see a lot of hype, right? A lot of like now you buy a fridge and like it's powered by AI. Why do I need a fridge? Right? So, but where are the tools that are actually making a difference, a real impact in the industry right now? Because I see a lot of fronts like fraud, compliance, customer service, trading, portfolio manager, robo-advisor, like all those tools. Like, but where do you think is the real impact right now? Maybe you already answered with
so it's fun for me. We have about 790, actually exactly, experiments using AI within Apex going on right now, and it will revolutionize every single aspect of our business. There's no doubt about it. And if you're not playing with the technology, right? And simple, when I say playing is, ask ChatGPT or OpenAI or Grok. Grok is the one that I use. Personally, it's just amazing the amount of, sort of power in the technology. And you talked about customer service. Let's just talk about our business, customer service, right? I have a lot of people that are there just to answer questions. Right. And why? Why are they there? Right. We don't necessarily need those same people. Doesn't mean you have to get rid of those people, but have them work on something much more value add than, what's the status of my, fed wire? Right. And there should be tools using AI to do that. The second part is we have, like I said, 1,000 people, 600 are technologists. The expectation today, I'm not talking about 5 years from now, is that team of engineers should be 25% more efficient today using AI in terms of building code than they are, right? Historically, right? And so Apex is leaning, and you see, think about me as the CEO, it's like 25%, it's 150 people delta for us. Right? And you think about, okay, most of the people in the States, the engineers in the States make a good amount of money. I don't know, let's call it 200,000 all in. That is a massive impact. And, the most important thing, in partnership with Avenue is that allows me to move faster, right? Get product out the door faster. So yeah, if you're not leaning into AI as an individual, right, the technology's there. It's like, give you the analogy to when the internet started, that this is 10 times what the internet was, back when it started, 25 years ago.
Well, thank you, Bill. I think we're over time. We appreciate you flying all the way here to be with us today. Thanks, Lee. It was too bad you couldn't be here with us today. Yeah, thank you, guys.
No, but I'll be here around during the day with all you guys. Bill, thanks again for visiting us in Brazil.
Yeah,
Hope you have a great time over there with all the audience here.
yeah. Thank you so much. Thank you.